Hi everyone. Today we are going to understand contemporary accounting. Myself T.AMBIKA, Assistant Professor of Commerce. Contemporary accounting methods refers to the modern techniques and practices used by organizations to record, report, and analyze their financial activities. This method are designed to adapt to the complexity of today's business environment, including globalization, technological advances, regularity requirement, and evolving stakeholder expectations. In this, we are going to see four subdivisions, namely accounting for price level changes, social responsibility accounting, human resource accounting, and forensic accounting. The first topic is accounting for price level changes. It refers to the method used to adjust financial statement for the effect of inflation or deflation, ensuring that financial data reflects real economic values. Traditional accounting is based on the historical cost principles, which does not consider changes in purchasing power over a time. This can distort the financial pictures, especially in high inflation. There are some main methods of accounting for price level changes. The first one is CPP, that is current purchasing power method, current cost accounting method, hybrid approach. So current purchasing power accounting, it adjusts the historical cost financial statements using a general price index, then converts all figures to constant currency. Example, today's dollar. Focuses on purchasing power of money, not current replacement cost. For example, in inflation is 10% and an asset was brought for $100. The adjusted value is $110. Then next one is CCA, current cost accounting method. Asset and expenses are recorded at their current replacement cost, not historical cost. Reflect what it would cost to replace assets today. Better for assessing operating capabilities and maintaining capital. Example, if a machine was bought for rupees $50 5 years ago, but now its cost was $70,000. To replace, CCA would report it at $70,000. Then third one is hybrid method. Hybrid method combines both CCA and CPP. Adjust for both general price level changes and specific price changes in assets. So these are the methods of price level changes, and before that objectives are there. There are a few objectives: adjust for inflations or deflations, maintain comparability of financial data, reflect real economic values of assets, incomes, and capital, assist in inflation adjusted decision making. So, these are the objectives of price level changes. Then, next, we are going to see social responsibility accounting. What is social responsibility accounting? It is a contemporary branch of accounting that focuses on measuring reporting and analyzing an organization's social and environmental impact in additional to its financial performance. So, some of the key features of social responsibilities accounting are border accountability, non financial performance measurement, voluntary but increasingly expected. Border accountability. It goes beyond the shareholders to include shareholders like employees, communities, governments, and the environment. Then, non financial performance measurement. It includes data on environmental sustainability, labor practices, community development, human rights, diversity, and more. Voluntary but increasingly expected. While not mandatory in most jurisdictions, many companies publish sustainability report or corporate social responsibility report to meet stakeholder expectation and build trust. Framework and guidelines. Several institutions standards framework guidelines how social responsibility accounting is done. Global report global report initiatives, the most widely used framework for sustainability reporting. Sustainability accounting standard boards. It includes the industry specific standard focused on material sustainability issues. Integrated reporting framework. It combines financial and non financial performance in one comprehension report. UN Sustainability Development Goals. Many companies align their social responsibility goals with SDGs, that is Sustainability Development Goals. Carbon Disclosure Project focuses on environment disclosure, practically greenhouse gas emission. Benefits to the organization. It builds the reputation and brand loyalty, attract the social conscious investors, improve risk management, encourage the ethical decisions, can lead to cost savings. Next point is challenges. Lack of standardized metrics, subjectivity in measuring social impact, potential for greenwashing, cost and complexity of gathering and reporting data. Real world examples. Patagonia publishes detailed environment and social impact report, discloses supply chain practices, and donate 1% of sale to environmental causes. Then another example is Unilever tracks its performance against sustainability targets and integrated these metrics into core strategies. The next one is effective stakeholders engagement strategies. Regular communication. Constantly inform stakeholders about social and environmental initiatives to foster transparencies. Involve stakeholders in decisions. Engage stakeholders in decision making process to enhance trust and collaboration. Gather feedback. It is an important one. Collect the stakeholders' feedback to identify the areas for improvement and adopt practices accordingly. Educational forums and workshop. Host workshop to educate stakeholders on corporate social accounting and encourage active participation. Next one is understanding regularity framework. Key aspects, importance, then examples. Understanding relevant laws, critical for complaints and avoiding penalties. It secures Exchange Act. compliance with international standards, enhancing creatability and transparency, globe reporting initiatives, preparing for audit and evaluation, ensuring accountability and integrity, ISO 260,000. Non-compliance requires legal reputational damages, Subordinates Act. Effectively measuring social impact. Utilize a quality and quantitative matrix. Conductive survey and interviews. Leverage technology for data collection, enhancing transparency and strategy. Employ both qualitative and quantitative metrics for comprehensive assessment of social contribution. Engage with stakeholders through survey and interview to gather valuable feedback on social impact. Use advanced technology to streamline the process of data collections and analysis for social impact measurement. Ensure accurate measurement, enhance transparencies and guides future strategic for corporate social responsibility. The next one is human resource accounting. Human resource accounting is an accounting method that identifies the measures and reports the value of human capital in financial terms. It recognizes the employees are valuable assets to an organization, just like physical assets, and aims to include their value in the company's financial statement or internal reports. Some of the key concepts are HRA treats them as investments in human capital, reflecting their contribution to the future earning and growth. Some of the objectives of HRA is or quantify the value of employees on an organizational asset, help management make better HRA decisions, assist in evaluating the return on investment in human resources, improve transparencies for stakeholders about how human capital drives values. Methods of valuing human resources. First one is cost based approaches. The second one is value based approaches. So there are two types of methods, cost based approach and value based approach. The first one is historical cost method, then replacement cost method. In historical cost method, it measures the actual cost spent on recruiting, training and developing employees. Replacement method estimate what it would cost to replace an existing employee with someone of similar capability. Value based approach. Present value of future earning method. It calculates the present value of employees' estimated future earnings for the organization. Economic. Assign value based on the employee's expected contribution to organizational profits. Opportunity cost method. It measures the value of employees based on the opportunity cost of assigning them to one task over another. So some of the example for HRA applications. Let's say a company spend 5,000 on hiring, 10,000 on training, and the employees is expected to generate 10 1 lakh in value over 5 years. The human asset value might be calculated as the present value of that 1 lakh, adjust for hiring or training cost, turnover risk, and discount rate. Then, benefits of human resource accounting. It promotes the strategic importance of people in value creation, aids in workforce planning and budgeting, enhancing organizational transparencies and reporting, support investors' confidence in people driven industries. Some of the limitations of HRA: subjective in valuation method, human capital can't be owned or controlled like physical assets, no standard accounting treatment under IFRS or GAAP, potential ethical concern about monitoring people. HRA in practice. While HRA is not officially part of a financial statement, many organizations use it in internal report, balanced scorecards, annual sustainability, or integrated reports. Assessing workforce value, HRA evaluates employees' contribution to the organization. Informed talent management, HRA enables data driven decisions in managing talent. Aligning HR with business goal, strategic alignment of HR practices enhances performance. Enhancing financial performance, recognizing employee value can boost overall financial success. Promoting accountability, HRA foster a culture of accountability with the organization. There are some key benefits of human resource accounting: better resource, enhancing employment retention strategies, improved financial reporting, increasing organizational transparencies. Valuation method of human resource, historical cost method, replacement, and prevent value of future earnings. So, barriers to effective human resource accounting: quantifying intangible assets, lack of standardized practices, then assistance from management. Successful HRA integrations, example IBM, Google's employee experiences focus. Trends in human resource accountings are increased use of technology, focus on employees' experience, integrations of HR matrix. Human resource as an asset, recognizing employee as a valuable economic assets. Enhanced decision making, financial performance improvement, fostering transparencies. The next topic is forensic accounting. What is forensic accounting? It is a specialized field of accounting that combines accounting, auditing, investigative skills to examine the financial record for use in legal proceedings. It's often described as detective work of the accounting world. So, forensic accounting is the detective work. It involves that investigating a financial frauds, embezzlement, money laundering, bankrupt disputes, and other financial crimes. Forensic accountants analyze, interpret, summarize, and present complex financial and business information in a way that understandable in court. Key role of forensic account: fraud detections and preventions, identify a fraudulent financial reporting, assets imappropriation or corruption, litigation support, assist in calculating damage, settling disputes, or supporting attorneys during legal cases. Next one is investigate accounting. Uncover hidden assets, trace funds, and follow paper trails in criminal or civil investigation. Then next one is export witnessed testimony. Present finding clearly the persuasively in court. Common areas are corporate frauds, insurance claim, divorce settlements, bankrupt and insolvency, money laundering, tax evasion. So these are the points for forensic accounting. So there are some skills required for forensic accountant. Strong foundation in accounting and auditing, investigate mindset and attention to detail, knowledge of legal procedures and documentation, communication skills, especially for reporting and testimony, proficiency in forensic tools like IDEA, ACL, and case. So these are the points covered in contemporary accounting. Thank you.